Hi, this is Kim Watson from Easy Trader. Welcome to a midweek update. I wanted to cover a few things off today. I tend to miss these updates normally because we're trading, but whilst I'm looking to be trading, the markets ahead of the FOMC are pretty flat, so I thought I'd just cover off a update for you and also look at a couple of other things. In fact, I'm going to start off with the other things and I'll put the update towards the end of the video. So here goes. Firstly, just a reminder more than anything else. I know our day traders in our live trading room are aware, but I do a video update every morning. Now you can find this in the daily blog or just go to the blog on our website. So if you want a quick morning update, it lasts about 4 or 5 minutes. Covers all the main forex pairs that we trade, the 4 or 5 pairs we trade. So it just really gives us sort of a very early morning view. So if you're not getting it, I don't send it out on an email each day, otherwise you'd be inundated by emails. So it's there if you want it. It's just really a reminder more than anything else. You can sign up on Vimeo on our Easy Trader Vimeo webpage, in which case you'll get a reminder every time a new one gets posted as well. And of course Twitter, Easy Forex Trader, I think it is. If you're on Twitter, it automatically uploads to Twitter. So a few ways of making sure you get a brief update in the morning. Now, talking of which, let's just one of the things that I've been asked about, and we've discussed in the trading room a little bit. It's a regular subject, and it comes to charting packages. Now, I notice people use a multitude of different charting packages, and obviously have good experiences with some. Some people have less good experiences with others. One of the problems with some charting packages is the pure fact that if your data is incorrect or the calculations are being made on a different time frame, it's often difficult to see, and you may miss clear setups. The other thing, of course, with trading charting packages is if you're trying to backtest, we like to look back more than a few weeks, and some backtesting, some people trying to do some backtesting did a webinar late last year, and people have been trying to do some testing, come to use their broker's charts, and they're finding that, well, they can only go back a month or two, or maybe 3. Now, of course, that impedes the chance of actually getting any real meaningful information in a lot of cases, particularly when you're looking at short-term time frames when setups may only occur 1 or 2 times a day, if that. So it's well worth looking at charting packages. Now, we use eSignal, Charlie and myself, but rather than just dictate what we use, we just thought it'd be interesting to do a bit of a research. So what we've done, on the bottom of the underneath the video, you'll see a charting package survey. Really appreciate if you just take a couple of minutes. It literally would take a couple of minutes, if that. Pop your name in, and at the moment I've listed the sort of most common charting packages here. Just click which charting package. We really want to see how the functionality, understand how you rate the charts for functionality, feed quality, rate your charts for historical detail. Can you go back 6 months, 9 months, 12 months, rate those, and also how easy is it to use. So it's a subject that we've been looking at. We've had meetings with eSignal in terms of them helping us help you more, for those people that use eSignal, but we also obviously use other charting packages, and a lot of the time the charting package is determined by what you're wanting to trade. For example, US stocks telecharts is particularly good. It does have currencies on there, but to me they're slightly limited, but still they're there. ShareScope is much more UK centric and provides UK stocks and some US stocks. Of course, you can get the data feed for those, but it's much better than telecharts because the UK stocks is only the top 100 in telecharts, so it gives you a much wider range, and so on. But I mean, these are just a few that I just thought of. But it'd be interesting to get you to rank them. If you've got some general comments, pop them in the bottom there and just submit your review, and we'll give you some feedback on your feedback effectively, and anything that we can see that we can help you with. But who knows, there may be a charting package someone's using out there which is absolutely superb, does everything you want to do, and is well worth us talking about to share with the rest of our trading community. So I just wanted to talk about that. Reminder, we've got the live trading course coming up in February. Now, quite a few people have started inquiring, and a few have put their put their deposits down, but we do really need to get numbers in just to let the venue know as much as anything else. But the venue looks pretty cool. It's got really good quality broadband. It's in a good location, so it should be good fun, and hopefully we'll get some good trading done. So, and more importantly, good learning. Right, let's have a look at the markets now. We've got the FOMC coming out at 7 o'clock this evening. Well, up until that point, I think we're just going to see the markets. I mean, if you look at the range of the euro at the moment, it pretty much ties things up this morning. The euro's really just played around. It's pretty range bound this morning. Cable's done a little bit better, but ignoring what might happen coming from those, because we can only there's no point second guessing what's going to happen. One of the things I've noticed, and I've been talking to the guys in the room and on my daily updates, is for a while now we've been having a bit of divergence going on across these lows here. So we've got the low here, here, and here, and what you'll notice is the RSI was very low there, not quite so low, and a little bit higher there. So effectively, we've got the strength of this downward move has weakened, so there's certainly a divergence of what's going on there. How far can it go? How much more of a retrace? We're pretty oversold in terms of the euro, the pound, in terms of when you're looking at the bigger time frames. There are still some downside targets that could be reached, but I am just wondering, in terms of the patterns that we've got at the moment, whether we'll see a little bit more of a retrace. So it's just a thought. If we start breaking, I mean, we could even just draw a trend line. If it starts breaking towards breaking that trend line, we'd be looking forward towards the daily 21, 34, and even 50. Now they've been hit before, but the price is quite a range away from these. So it may, whilst I'm bearish the euro in the longer term, I just think we may get a bounce back towards that 120 area at least, and maybe a little bit more, but we'll see. But there's certainly the possibility. One thing, other thing that to bear in mind, there generally we close from a monthly perspective. We generally close inside the S3 area on the monthly pivots there, just from a probability basis. So there's a bit of a chance as we're moving towards the end of the month here, we could just pull back within there. Okay, euro dollar. Let's have a look at the pound dollar. Similar sort of picture-ish. Let's just get rid of those pivots out of the way for a moment. So we've seen a similar range here. We had the divergence running across the lows from the low here to here on the dailies. So we've got the divergence running. It is in a strong downward trend, and again we may see more of a correction. But we're around that key 1.5 area. Is whether it can actually get some momentum to this upside movement, which is an intermediate sort of bullish sort of mode that we're sitting in there, right onto the daily 21 at the moment. If we can get a bit more momentum behind that, maybe we can get back up to the 50, 34 and 50. 50 has certainly not been hit for some time. So again, and also the thing I was looking at there was, I'll just remove the drawing. We've also got we're back in above the S3 now, so we could be pushing up a little bit further there. Now, of course, if the FOMC was to particularly under-deliver and become very dovish, we could see the European countries and the pound rallying back towards their monthly pivots, respective monthly pivots. But I think that might be a big ask at the moment. But certainly, as I say, we've seen these sort of oversold sort of signals. Maybe we just get a little bit more of a push upwards here. Of course, any failures to do so, and if it starts selling off, of course, we've got the previous lows in both the pound and the euro sort of sitting not that far away, which would be easy targets to be running for, and maybe see a bigger correction down to the 1.1 or even down to parity with the euro and the pound, euro and the dollar. Right. We'll do one more look at the dollar yen. I'm struggling with the dollar yen much more on the daily point of view because, well, as you can see, it's sitting in this zone of happiness, as I refer to it in a sense, because the Japanese are happy that they're in this bigger range. It suits them in terms of where they would like the yen to be, most likely, in terms of ensuring it's inflationary in terms of that bringing product in, and obviously it's weak enough to make their product cheap elsewhere, so increases or potentially increases sales. competitiveness. So it's sitting there in that nice world. What is it going to do? To be quite honest, it's very difficult to tell from here. It could, of course, break out this box section back towards the highs at 122 region. It could come back and test the lows here. We may see something a little bit more clearer from the FOMC report later, whether that just generates it into a bit more of a move. But at the moment, I've been really steering clear of the yen and not been trading it and looking for trades on it, particularly because I think with not only with these sort of daily bars like this, the intraday is quite whippy and the 4 hourly is quite whippy. So it's for me best avoided at the moment. Finishing up with the Aussie dollar. I'm just going to remove the pivots for a moment. And so you've got a bit of a clearer chart here. We've got a few trend channels and things that I've got still sitting on here. Let's just remove this. Let's remove that and that and that. That's it. Get those out of the way. So it's a clearer chart. Now the Aussie dollar's been having a hell of a time. There's following the comments and the CPI figures that came out throughout the night. I don't think there's going to be any easing or any obviously increase of interest rates anytime soon from the Reserve Bank of Australia. So we could just consolidate, continue watching what's happening in China, weakness from China and the Australasia sort of zone. Could see the Aussie weaken further. At the moment, it looks a tad oversold, maybe. I was looking at it today as along with the pound and the pound and the euro, and expecting it to be pushing up a little bit more. It's just run into its daily 8 there really, and it's just got back to parity to where it was earlier. The market opens effectively. So it's not one I'm looking to trade necessarily at the moment. It may give some opportunities as we push on again, but for now it's a good intraday chart. Currency, quite often we get some nice moves off it, but at least it's got good direction in terms of the downward trend. That said, we've been having some good intraday long runs on it, but we'll see how it runs. But for now, the emphasis really has to remain flat to bearish. Okay, that's it for me. I hope you have a great day, and we would really appreciate any feedback, as I say, on the charting packages. Good day, good week. I'll be back possibly on Friday. Bye for now.